Alrighty. Good morning, everybody. Pretty interesting morning so far, even though the market is pretty much flat. Lots of stuff moving around. Give me a thumbs up if you hear my voice. Perfect. All right, getting started, guys. Welcome to the Hurley Investments Trade Findings and Adjustments of June 27th, 2024. As always, good to be with you. What do we have? This is from, I think what was it, like the 13th or something like that? June 13th. Talked a little bit about the tech industry keeping everything up in the market, holding the market up while a lot of other stuff slid. Talked about Nvidia or Micron for a trade. Talked about bull calls. Look at those just to follow up with some of those. That would have been the 13th. So a couple days could have made a good amount pullback if you had done, like I said, in a long-term bull call. I said to have a hedging option. You have a short against a long. You'd still be doing all right. Your short would be making more money at this point, and you'd be losing on your long. But you would have hopefully done as I'd said and got in there for something for longer term, or you could have got out for a profit if you were quick there. Micron. Oops. Gotta type it in over here. 13th. So you would have a nice big jump. Hopefully didn't get greedy. Once it hit overbought, just kind of tumbled. Why is Micron down today? It's not because they nicely beat their earnings numbers, because they did nicely beat their earnings numbers. They're down because their guidance came in as expected. So those of you who don't know, guidance is just kind of like the future guess as that a company will have about their future earnings and give you a general estimate. And for, a long while now since COVID, when supply chains had been messed up, nobody wanted to really give good guidance on anything. And that's kind of still been the case for a large part of a lot of companies. But I guess this time, people wanted Micron to give guidance that exceeded what was expected. And they said, no, it's going to come in, looks like it'll come in about roughly what we expect. So apparently that means the stock needs to drop 5%. Not a huge deal in the long run. I don't even know if it's even going to test this 50-day. A couple times it's come close on this huge, ridiculous bull run. Back in February, once it beat up above the 50-day, it hasn't really touched it since. There's maybe this time, May 31st, the low, let's see, 121, very close, basically hit it, and then went on a ridiculous $20 or $25 run. But I think just got a little overextended, overbought, and that was the big pullback. We had gotten 145 puts on for that pullback and the earnings, and pretty much ran through these last few days before earnings with those 145 puts. So those are making up the downward movement to a large degree this morning. And if you had done the leap bull call as I had suggested, you're still again making sure you have that short on there. And you obviously don't have to take it off, even though there might be some profit in it. You still get all of that credit if it continues to, if it will find a support level and bounce and continue to go up. So also talked about maybe looking at puts on a couple stocks. Oops, not BQ, I want BA. And contingent on if they break support levels, suggested to look at other stocks that might be getting beat up a little bit. Looks like Boeing is still trying to hold on there. Up today, it hasn't held its gains, but still nicely above the 50-day, so I would suggest not doing something in the way of puts till it looks like it really can't hold that 50-day. Baidu, held this 88, looked like it was trying to build a support level and it's just kind of fallen through that. And I may look at adding protection for our group of accounts that we manage on Baidu, but the reason I hesitate is this right here. Way, way oversold, and Baidu hardly ever gets oversold, and when it touches that oversold line, it's gone on crazy big runs. You can see it hit 94, 95 and went all the way up to 113. It oversold, just tapped on it, went from 97, 98 all the way up to 111. So kind of silly that it's being allowed to fall down below, but that is one I'm looking on for whether or not we add puts, because I just don't understand why people aren't seeing the opportunity there to buy that dip. Okay, that's from last time. What are we looking at? Well, this week some of our tech stocks, Apple, Nvidia, Micron, as I already showed you, kind of had a little bit of a falter, but they were all very bullish and hitting over bought and maybe a bit extended. And we have 210 puts on Apple just to navigate this volatile little stretch here. In case it doesn't want to hold up, we can protect some profits. Nvidia was similar thing. Obviously, Micron, we had to have the 145 puts on for earnings. Glad those are on. We have 125 puts on here for Nvidia. And we're just kind of in the middle of this little wild range. And I suspect it will kind of even out and slow down. Maybe head sideways for a while to let the 50-day catch up before it starts to make its way up again. Nvidia had a bunch of insiders take profits, which I guess who could blame them after the run it's gone on, but a bit annoying for us investors. So I'm going to say holding on to protection for tech stocks, Apple, Nvidia, Micron. Right now, these guys are getting the AI trade. And then obviously they have been for some time now. We have PCE numbers coming out tomorrow. Let me go back to Apple. Apple went all the way up to 215. Fell right from 215 this morning. Couldn't get above it. So likely I will hold on to those puts for Apple as well. But for our big tech stocks that have made such a ridiculous run, PCE numbers coming out tomorrow. Probably going to hold on to those puts unless one of these just decides to make an incredible reverse and really start going up, but doesn't look like it. Highly unlikely. Was a little worried about Bank of America this morning. Dropped, held up really nicely right on that 50-day. Started to fall below it this morning and then popped right back up. All the technical support sort of things you want to see happen are happening for Bank of America. Banks all survived their stress tests. So a bit of a bounce for that. Same with JP Morgan, just for reference. So what would we have in the way of a trade? Tough one to call today just because of those PCE numbers coming out tomorrow, and the Fed really likes to pay attention to those, and depending on where that goes, really is going to dictate the market tomorrow. One idea I did want to look at was WBA, Walgreens. Yikes. struggling on their pharmacy numbers. They cut their guidance, which if you followed what I said with Micron holding their guidance as is and still went down, you can imagine anybody saying their guidance is less than they expect is going to really suffer. Last time it looks like it was oversold, took a week here, but had a little bounce before coming back down. Definitely oversold here, had a 2-day bounce, started to tumble slow. So maybe I would suggest looking at something like put on Walgreens under certain check marks that needs to happen. I'm running out of batteries, so I'm probably going to run on you guys sooner than later. Oversold and may have a dead cat bounce. Look for that as an opportunity to buy puts. Out for 6 weeks or so. Profit from a bearish move. Just an idea. The only other idea I might have is something like, I was talking to Bill yesterday. He had an idea for covered calls on a Google. It looks like you can get a decent amount of credit if you go out a couple months. Out to August was like $5. Not a bad idea for maybe running that. Run into earnings on 7, we'll say around because we don't know definitely yet, 727, maybe 723 estimated. So you might look at before that, which is just going to be under a month, probably even 3 weeks at this point. Don't think you're going to be making $5 of credit if you're out only 3 weeks though. Just a little one, couple percent, have it expire worthless and get out of it. Or if you're in a Google long term and you're managing that, then you can go further out and you'll have a collar trade through earnings where you have puts and short calls. But the idea, excuse me, the idea is that every time they've hit overbought at any point, they've fallen a little bit, like $5 or so. Came down here for a couple weeks, hit here, big drop, here a couple times. Some of them are shorter drops, but it is something. So that's it. Just an idea. Some others that you could look at as well. I'm going to let you decide. All right. That's really all I had for you this morning. Any last questions before we might get disconnected and my computer might shut down? Lee, was it you that asked about shouldn't we be running some covered calls? Here's your covered call idea. I think the market has run up so much and there is some opportunity, just not necessarily in a lot of the stuff we're in, just because we tend to be wrong on getting covered calls on sometimes, especially on Apple. Stupidly put covered calls on around here when it reached 195. Really made a lot of sense. You can see back here where it touched that and came down. And then, of course, had a ridiculous rally. So, but if you're just looking for a shorter trade, you feel like stock that could very well go up but might go sideways, like it seems like the market is heading in general, could be a good idea. All right, guys, that's all I had for you. No questions coming in. Thanks for joining me this morning. And Kevin, I think, is back on Monday, so please join us again then. And we'll see you then. Take care.